Well, it's a real pleasure to welcome back James Turk from goldmoney.com. With the dollar plunging to levels not seen in nearly 3 years, it's a pleasure to welcome today's featured guest, James Turk, founder of goldmoney.com and author of The Coming Collapse of the Dollar and How to Profit from It. Welcome back, James.
Thank you, Chris.
Last time we spoke, you said that Gold Money now has over $1 billion under management. Is that true?
Well, yeah, it's now $1.8 billion. It's not really under management, though. It's assets that our customers own that we're simply safeguarding for them. We don't make decisions for them. We just make sure their assets are safe.
It's quite an accomplishment approaching the $2 billion mark.
The way we're growing in terms of volumes and the way the precious metals are moving higher, I hope to be over $2 billion in the not-too-distant future.
I suppose it's only appropriate to start our market dialogue here with the dollar crash. Within the past 2 weeks, the ECB raised rates, and that seemed to send the euro much higher, and, of course, its currency pair, the greenback, through support. It looks as though a retest of those 2008 credit crisis lows may be in the cards here. The Fed futures contract is saying that there's very little chance of the FOMC rescuing the dollar at this week's meeting. Do you see the dollar heading lower?
Yeah, I really do. In fact, I'm anticipating a waterfall decline in the dollar in the not-too-distant future. We'll know more as we get closer to the end of June, and the Fed makes it clear what its intentions are with regard to continuing quantitative easing or ending quantitative easing. But, the reality is that I don't see how they can stop quantitative easing. They're on this treadmill, and I think they're afraid to get off. And given that the politicians in Washington are continuing to spend like there's no tomorrow, that debt has to be financed somewhere, and it's going to be financed by the printing press. That's very, very inflationary.
As one might expect, gold, and particularly silver, benefited from this trend on Sunday. One major silver wholesaler was purchasing 100-ounce silver bars at $50. This is the buy price. The sell price was in excess of $52. They regularly are now showing a shortage of the 100-ounce bars on their website. Another source claims that the Monex is completely out of silver.
Well, the market is tight. It's been tight for quite some time, and silver remains in backwardation, where the spot month is higher than the futures contract in December 2015, and that's about a 65-cent backwardation, which is a very, very rare event, but it's an indication of how tight the physical market is. But what's happening here, Chris, is that the paper market is becoming less important as a price discovery mechanism. And people are placing more emphasis on the physical market. So, when you're looking at valuing, the physical metals that you hold, don't look to the paper markets, look to the physical market and what the dealers are actually doing. And you'll see that, the market is very, very tight, and you have, backwardation conditions in silver, and, these are likely to continue.
The last time we spoke, you mentioned the silver backwardation and went into some detail there, but you also suggested, if memory serves, that you were anticipating potentially gold could enter a similar scenario. Do you still think that that's plausible?
It's not out of the realm of possibilities. Whether it happens or not, only time will tell, but it will be very significant if gold goes into backwardation, because what it will be reflecting is not really a tightness so much in the gold market, but it'll be reflecting a collapsing demand for the dollar. People will not want to hold paper. They want to hold a tangible asset. And if that happens, then, we definitely will see a waterfall decline in the dollar and an upward rocket explosion in the price of gold and silver, too, for that matter.
You're talking about the parabola even extending itself.
Yeah, I'd like to see, as we move toward the end of June, my target all along, Chris, we've spoken about this, was $50 sometime in 2011, and I thought it was going to happen by the end of June, and we did get 49.78 early Monday morning in Asia trading, so, that's close enough, in terms of that 50 target. But I'm not saying that this is a top. The demand is continuing, the backwardation is continuing. I don't see how the silver price can have any kind of a major correction as long as it remains in backwardation. And, with regard to gold, if gold does go into backwardation as well, then you're basically saying that, people are moving out of the dollar. You have a flight from the currency, and in that environment, the dollar, goes over the edge, probably in some kind of a hyperinflationary blow-off.
If we examine your alternative hypothesis that backwardation could be this specter of support, if you will, is there any statistical evidence that you've reviewed?
No, this is the first time that silver has been in such a prolonged backwardation. It goes back to January, which is very, very rare. The price of silver in January was $26. Here we're in the high 40s. So the price of silver has nearly doubled. And one would have thought, that backwardation would be eliminated. The higher price would entice people to part with their physical silver and hold dollars instead. But in reality, the backwardation has continued. There's been no let-up in the demand for physical metal. And who knows where this backwardation is finally going to end. Maybe it won't end. And like I say, maybe it'll ultimately lead to backwardation in gold, which would mean that, we're really starting to see a collapse of the U.S. dollar.
After this Sunday's Easter service, I met with friends and family at a local alfresco meal. But the topic came up on precious metals. What is driving silver so much higher? And I just simply pointed out to the folks that gold is $1,500. And if you want to purchase an ounce of gold, the typical person out there or family just doesn't maybe have, $1,500 for a single coin. But when it comes to silver, you can pick up roughly 30 silver ounces for about the same price as an ounce of gold. Do you think that poor man's alternative is an important factor here?
No, I think, you're seeing demand at all levels, the upper echelons and, the lower echelons. Everybody has this growing worry and nervousness about what they see as inflation becoming worse, and they're looking for alternatives to protect themselves. And that's true regardless whether you've got a big bankroll or a small bankroll. But, at the end of the day, Chris, the key on silver is that it's still relatively undervalued, as is gold. And silver is even more undervalued on a historical basis in that the ratio is still around 35 or so to ounces of silver to buy 1 ounce of gold. And the historical norm is around 16 ounces of silver to buy 1 ounce of gold. So a lot of people see silver as a cheap form of gold. And at the end of the day, 35 ounces of silver provide the same amount of protection that 1 ounce of gold does, in the sense that it's a tangible asset with no counterparty risk, and they're both money. I expect the demand for silver to continue strong.
Geologists claim that there's between 10 and 16 ounces of silver, or let's just say the ratio of gold to silver in the Earth strata is roughly, let's say, 16 to 1, according to which you reference. So that supports the idea there that we could see this gold to silver ratio continue to decline, which, of course, positive for silver and certainly not negative for the yellow metal. How much of a factor has the huge explosion in industrialized mining had? For instance, we see a huge amount, I think, of silver thrown off of copper production, lead production. Many of these non-silver related mines are pulling silver out of the ground, as well as gold mines, for instance. Do you think that's important, or is that just ancillary here?
Well, I think it's ancillary because there's a lot more dollars coming out of the Federal Reserve's printing press. The reality of where we are today in terms of, the market, the Fed and the Treasury Department are debasing the dollar by their policies of spending too much money, and the Federal Reserve accommodating it with quantitative easing. So, that's what's lit a fire under the gold and silver prices, and I think that's going to continue. And I expect it's going to continue beyond June. But, as we move toward that end of quantitative easing version 2 at the end of June, I want to see what the Federal Reserve is going to do. There's always a possibility they could do the right thing and do what Volcker did, raise interest rates to defend the dollar. But, the mentality at the Federal Reserve today is much different than the mentality at the Federal Reserve 30 years ago.
Well, that's a great segue into the next question I had here. The Cleveland Fed hosts a webpage that shows the Fed funds outcomes for a few months into the future. Currently, of course, odds show no chance of a rate hike. And this seems to support the idea that a QE3 could be forthcoming. So you're keeping an eye on the Fed. Do you expect hawkish comments this week from the FOMC?
Well, if not this week, then next week. They always do a lot of jawboning, and propaganda is a very important part of their campaign to try to get people to hold dollars instead of fleeing to safe havens like gold and silver. So you got to expect the jawboning, you got to expect the propaganda. Whether it's this week or next week, it will happen. But propaganda is really worth nothing. It's just hot air. What you really have to be following is their actions.
Ben Bernanke is holding the dollar lower in an attempt to boost corporate profits because, as we know, the industry benefits from having competitive prices worldwide. That's boosting our exports. But at the end of the day, what is the cost to the other 250 million Americans who aren't insulated from the ravages of inflation? And that leads me to the last question here. Gold, silver, excellent barometers of inflation.
When John Rambino and I wrote our book, The Collapse of the Dollar, back in 2003, and it was published in 2004, the hyperinflationary outcome in my mind was sort of unbelievable. I didn't think that the Federal Reserve would pursue policies the way they are, and they're clearly on the road to hyperinflation. But the last couple of years, I've definitely been beating the hyperinflation drum, and the dollar really is on the path to what I call the fiat currency graveyard, and hyperinflation is what's going to kill the dollar.
Could you please tell folks more about your flagship services at goldmoney.com?
Yeah, we're very convenient and economical and, most importantly, safe way to buy, sell, and store gold and silver. And you have the advantage of doing that in London, Zurich, or Hong Kong, which gives you good geographic diversification as well as jurisdictional diversification. And when it comes to gold and silver, which is the bedrock asset in your portfolio, you want to make sure it's as safe as possible and not take risks with it. And spreading it around in different countries is a safe way to mitigate risks of confiscation and other political acts.
Well, sir, it's always a pleasure. Thank you.
Thank you, Chris. It's always a pleasure to speak with you.